Are you interested in investing in Canadian dividend stocks in 2023? If so, you've come to the right place. Let's talk about dividend stocks. These are shares in a company that pays out a portion of its profits to shareholders, giving you a steady stream of income on top of any potential capital gains. They're a popular choice for investors looking for a solid, less volatile return on their investment. Now, why focus on Canadian dividend stocks? Well, in 2023, they're set to offer some compelling opportunities. With a diverse economy and robust financial sector, Canada is home to many companies with a strong track record of paying reliable dividends. Whether you're a seasoned investor or just getting started, Canadian dividend stocks could be a valuable addition to your portfolio. Before we dive into the details, don't forget to like this video and subscribe to Caffeinated Money for more financial tips and insights. Let's get straight into some recent news about Canadian dividend stocks. We'll begin with a dividend hack strategy that's been buzzing around, which involves timing your stock purchases just before dividend hikes are announced. It's like catching a wave just as it's about to crest. This strategy particularly highlights two stocks, Toronto-Dominion Bank and Chevron. Given their reliable history of dividend growth, they are projected to announce significant dividend hikes soon. Furthermore, the positive stock market performance we usually see during November, December and January, coupled with the potential for rising oil prices, make Chevron an especially enticing investment. Switching gears, let's glance at the Money Show Top Picks report for 2023. It showcases 7 favorite stocks in the commodities sector, specifically within gold, silver, uranium and lithium miners. Among these, Pan American Silver, Uranium Energy Corp, Barrick Gold, Sociedad Química y Minera, and Agnico Eagle Mines stand out as promising picks. Whether you're looking for a way to invest in silver with limited risk, a conservative investment with bullish uranium fundamentals, or an income-oriented pick with a low-cost lithium deposit, these stocks have you covered. Now, let's not ignore the elephant in the room, the possibility of a recession in 2023. While it's expected to be a better year than 2022, it doesn't hurt to secure your income streams. Enter recession-resistant dividends. Canadian Natural Resources, with a high dividend yield of 4.2% and robust cash flow, is a strong contender in the energy sector. Similarly, Life Storage, boasting a dividend yield of 4.3% and a growing funds from operations, is a resilient option in the self-storage sector. Both these stocks have demonstrated their mettle in past market downturns, making them worthy of consideration. These recent news pieces show us that there's lots of potential in Canadian dividend stocks for 2023. Now that we're up to speed with the recent news, let's look at the top Canadian dividend stocks for 2023. First up, we have Toronto-Dominion Bank, a reliable dividend grower. Timing your stock purchases just before dividend hikes are announced can be a smart strategy, and this bank is likely to announce substantial hikes soon, which is a definite plus for potential investors. Next, let's turn our attention to Chevron. With the potential for oil prices to rise, this stock presents an attractive investment. And let's not forget about the favorable stock market performance we usually see in November, December and January, which could be a good sign for this stock. Moving on to the commodities sector, we have several picks. Pan American Silver is an ideal way to invest in silver with limited risk. Uranium Energy Corp is another top pick, particularly for conservative investors due to bullish fundamentals for uranium. Then we have Barrick Gold, the second largest gold mining company with long-term growth potential. Sociedad Química y Minera is another income-oriented pick due to its low-cost lithium deposit and specialty fertilizer blends. And lastly in this sector, Agnico Eagle Mines, the largest listed Canadian gold producer with growth potential, is a stock to watch. Now let's discuss recession-resistant dividends. In 2023, even if a recession hits, Canadian Natural Resources is a stock to consider. With a high dividend yield of 4.2% and strong cash flow, this stock has shown resilience in past market downturns. Similarly, Life Storage in the self-storage sector is a promising contender. It boasts a dividend yield of 4.3% and growing funds from operations. Like Canadian Natural Resources, Life Storage has proven its resilience in previous market downturns, making it a safe bet for those looking to secure income streams during a potential pullback. These are some of the best Canadian dividend stocks to consider for your portfolio in 2023. Each of these stocks offers a good dividend yield, growth potential, and a level of security that can be appealing to investors. As always, it's important to do your own research and consider your own risk tolerance when investing. With that in mind, these stocks could be a great place to start as you build or expand your investment portfolio in 2023. Choosing the right dividend stocks requires careful consideration. It's not as simple as picking the ones with the highest yields. It's about understanding the company and its business model. Is it stable? Does it generate consistent revenue? These are questions you should be asking. Researching a company's dividend history is also fundamental. Has it consistently paid out dividends? If a company has a solid track record of dividend payments, it's a good sign they value returning profits to shareholders. Look at the revenue and earnings growth. Companies with a strong history of revenue and earnings growth are more likely to increase their dividends over time. It's a positive indicator of the company's financial health and its ability to sustain dividend payments in the future. Another factor to consider is the dividend payout ratio. This is the percentage of earnings a company pays out as dividends. A lower payout ratio could mean the company is retaining more earnings for growth, while a higher ratio may indicate the company is returning more profits to shareholders. However, a payout ratio that's too high can be a red flag. It could mean the company is not reinvesting enough in its own growth, which could impact future dividends. By keeping these tips in mind, you can make informed decisions about which dividend stocks to invest in. Investing in dividend stocks can be a great way to generate passive income. We've explored the promising world of Canadian dividend stocks for 2023, highlighting the potential of Toronto-Dominion Bank, Chevron, Canadian Natural Resources, and Life Storage as key players. Remember, these stocks are not only about the returns, but also about resilience amid market fluctuations. It's crucial to conduct thorough research and understand the company's business model, their dividend history, and other factors that could affect their performance. Thank you for watching. Don't forget to like this video and subscribe to Caffeinated Money for more financial tips and insights. Happy investing!